Let me say something that sounds crazy. Silver isn't going up because people love silver. It's going up because the system that prices silver is starting to break. And here's the scary part. If you only look at the silver price on Google, you're already behind because the real silver market doesn't look like the chart you're seeing. And once you understand why, you'll realize this rally isn't random, and it's not just about silver. Most people think silver is just cheap gold. That's the first mistake. Gold is stored. Silver is consumed. Gold sits in vaults, collecting dust. Silver gets burned inside solar panels, inside EV batteries, inside the data centers that run our world, inside missiles and satellites. And once that silver is used, it's gone. It's not recycled efficiently. It's not coming back. That one fact alone changes the entire equation. Here's the part that nobody seems to explain clearly. For years, the world has used more silver than it produces every single year. Demand is around 1.2 billion ounces. Supply is closer to 1.0 billion ounces. That gap has existed for a long time. So the obvious question is, why hasn't the price exploded sooner? Why now? The answer is uncomfortable. It's because most of what people call the silver market doesn't actually trade real physical silver. It trades promises, paper. On US exchanges, silver is mostly contracts, futures, claims on metal that may or may not exist in the quantity promised. It's a ledger of IOUs. But in other parts of the world, like Shanghai, industrial users don't buy promises. They buy the actual metal. They need it to build things. And in late 2025, the system started to show its cracks. Something truly weird happened. The price for physical silver delivered in Asia started trading $7 to $8 per ounce higher than the paper price on the COMEX in New York. Now, you might think that's just a premium. It's not. It's a warning sign. Because in a healthy, functioning market, if silver were truly plentiful, traders would buy the cheap paper contract in New York, take delivery of the metal, and ship it to Shanghai to sell for an instant, risk-free $8 profit. That arbitrage would close the gap in hours. But it didn't close. The gap stayed. And that tells you everything you need to know. It means the physical metal isn't available to close that gap. It means the price you see on your screen is no longer the price that matters. The real price is being set by those who demand the physical metal. And they're telling us something the paper market has been trying to hide. You've probably seen the headlines flying around. China restricts silver exports. It sounds dramatic, like they're cutting off the world. But that's not the real story. It's not even close. China didn't ban silver exports. They added licenses. And I know that sounds incredibly boring, right? Bureaucracy, paperwork. But this is one of those times where the boring detail is everything. Because what it means is that silver can still move, but only when permission is granted. That's not a ban. That is leverage. And if you think this sounds familiar, you're right. We have seen this exact movie before with rare earth metals. The playbook is the same. Control isn't about reducing the supply to zero. It's about making the supply political. It's about being able to turn the tap on or off depending on who's asking and why. It's about having a hand on the switch for the global economy. And this is where it stops being an abstract headline and becomes personal. You might be sitting there thinking, okay, cool story, but I don't buy silver bars.
Why should I care? It doesn't matter if you do, because silver is already in your life, embedded in everything you touch. It's in your phone, it's in your car, especially if it's an electric one. It's a critical component in generating your electricity, particularly from solar panels. It's in the servers and switches that deliver your internet. So when the supply of silver gets tight or political, those costs don't just disappear. They move. They flow downstream, right into your wallet. It shows up as higher energy bills. It shows up as more expensive electronics. It means that big infrastructure project, that rollout of 5G or new green energy grids, suddenly slows down because a key component is harder to get. See, silver is a tiny market compared to something like oil, but it sits at some of the most critical choke points in our modern world. And that is why it moves so violently when it gets stressed. A small disruption causes massive ripples. So, the big question on everyone's mind, is silver in a bubble? Short term? Maybe, of course. Pullbacks are going to happen. Speculators will cash out and take their profits. That's how markets work.
But if you zoom out and look at the long term, the fundamental picture, nothing has actually improved. In fact, it's gotten worse. Mines are not scaling up production fast enough to meet demand. The demand itself, driven by green energy and tech, isn't slowing down at all. The world's stockpiles are thin and getting thinner every year. And now, on top of all that, governments are getting directly involved, turning a physical shortage into a political chess match. That's not the setup for a bubble. A bubble is built on hype. This is a volatility trap built on a very real physical crunch. And that brings us to the final shift, the real message here. This story was never just about silver. It's about how our modern markets actually work. It's a warning. When the paper price of something, the number you see on a screen, drifts too far from the physical reality of that thing, the actual stuff you can hold in your hand, eventually something has to snap. The illusion breaks. Silver just happens to be one of the first and clearest places you can see that snap happening right now. And when you see that kind of stress in one corner of the market, it usually means the pressure is spreading everywhere else too. So the question isn't, should you buy silver? The real question you should be asking yourself is this: what other prices are you trusting every single day that are also just paper? If this made you see the market a little differently, that's the entire goal. This is What If Money, where we don't just watch the prices, we ask what's breaking underneath them. Subscribe if you want more of that.